Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, May 28th at about 2:45 p.m. Eastern. Thanks so much for your patience as I have been out of town off and on for about the past 3 weeks, and this is our first market now in quite a while. So again, thank you for your patience. We're back now. Okay, the Commerce Department said today that U.S. consumer prices surged in April with a measure of underlying inflation blowing past the Federal Reserve's 2% target and posting its largest annual gain since 1992 because of pent-up demand and supply constraints as the economy reopens. The report had been widely anticipated, and as the pandemic eases and will have no impact on monetary policy. And on that note, which is a pretty positive one, we will go on to look at 3 charts that could give us some insight into the week to come. First of all, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the exchange-traded fund that closely follows our S&P 500 benchmark index. Now, today when I captured this chart, the SPY was trading at $420.75. That's about 4,275 on the S&P 500 itself. It is now just about a half a percentage point, or not very far from its all-time closing high that was back on May 7th. And we use closing highs because the close is the most important part of the day. So the all-time closing high on May 7th was at $422.12. So after touching that all-time closing high, as you see, it was right here on this date, the SPY gapped up slightly the next morning. Then it fell in the next few days down to its 50-day moving average. That's the green line you see here, 50-day simple moving average. Now, if you look left with me back on this chart, you'll see that ever since October, the 50-day moving average has been acting for a pretty neat trend line for the SPY. So we know that it's an important trend line. It usually is anyway, but now it's very important for the SPY to stay above this 50-day moving average, as it seems to have assigned itself the role of the trend line for the index, certainly for this year and part of last year. So back to our story here. It fell from those all-time highs at 422 and change down to this low down here at about 405-ish. Then it rallied back up to the 20-day moving average. Note how it didn't fall through the 50-day here. It rallied back up to the 20-day, the red line, couldn't get over it. That acted as resistance, then fell back down once again to about 405. So that established support, price support right there. Then it rallied back up, punctured and walked through the 20-day moving average, and again is where it is right now at $420.75. So it's all nice and neat. It's all orderly. What we do see here, if we want to look for something to worry about, as most traders do, is we do see low volume. Typically volume falls off in the summer as a lot of traders from the big institutions head out for vacation. So usually we see lower volume, and sometimes because of that, even more volatility. So low volume, but everything is in good shape right here. In the coming week, we will see if the SPY can break higher there, continue this uptrend. Is it going to continue to trade horizontally, maybe between 405 and 422? Or perhaps it needs to take a little move into a rest stop here, and if it does, maybe it falls back toward the 50. Either way, please keep track, as most stocks will like to follow the SPY. Okay, for our next chart, as we usually do, we're going to look at the Invesco QQQ, I should say, and that is the symbol, the QQQ. This represents the NASDAQ 100, a very major index in the market. Of course, top holdings include Apple, Amazon, Alphabet, Facebook, Microsoft, Intel, that whole group, Netflix. So today when I captured this chart, the Qs were trading at $334.73. Now, for its all-time closing high, it made its all-time closing high, the most recent one, on April 26th at $341.63, that little green candle you see right here. After it made that high, and you see it moved up to pretty close to the high from before, but this high on May 26th was a couple of cents higher than the one about a week before. So at any rate, we have this new all-time closing high, again, $341.63. Second time was a charm, it couldn't make it. And from there, the QQQ fell, slid down to its 50-day, hesitated there, and then continued to move lower. So it made a pivot low on March 12, right here at 316, rallied back up. Look how the 50-day acted as resistance. So remember, when price is over the 50-day, you're hoping price will use it for support. If it falls through it, then what was support becomes resistance. So it acted as resistance up here, fell back down to 316, created the support, then rallied back up, and then had enough buyers to move all the way above the 50 and the 20-day, and then has been sidestepping for this week basically. And once again, look down, you're going to see low volume here, reasonably low volume for the QQQs. So we've got it again right over the 50 and 20-day moving averages at 334.73. You can see the trend lines I drew here. When we were looking at the SPY, the 50-day moving average drew a nice uptrend under price. Here I've drawn some trend lines for you so you can see the upper boundary here that the Qs have been trading in. And you can see how we have 1, 2, 3, maybe even 4, we can call it, hits to this trend line if you stretch it from back in October. So that makes this a major trend line now. When you can touch a trend line 3 times or more, it becomes a major trend line. So now that means we need to obey it, or price needs to obey it, stay above it. That's what you want to happen here. So that trend line comes in here at 320. So for overhead resistance now, again, we have at 341, call it 342 overhead resistance, then support down here at the 50-day moving average and the 20-day basically coming in at about 329, 328. So that's price support. Our trend line support comes in here at 320. Our price support comes in here at 316. All kinds of potential indicator support here and price support if the Qs decide to fall south here. And of course, the 200-day moving average, the black line, comes in at 307. So all kinds of support should the cubes need it. Otherwise, we'll see in the next week, is it going to just dally along in this zone right here above 320, above 316? Or is it going to fall? Again, lots of potential support. Or is it going to have the strength, some of the big techs, momentum stocks, is it going to have the strength to rise up over that all-time high at 316 and change? So we will, 341 and change is what I meant to say up here. So we will have to see. We're in kind of a midpoint now. The Qs are just looking to figure out which way they're going to go next. So remember, as with the SPY, many stocks will follow this index. So you may want to keep an eye on it in the coming week. Our third chart today is a daily chart of the Global X Cannabis ETF, symbol POTX. It has 26 holdings. Top components include Aurora Cannabis, Sundial Growers, Hexo, Kronos, and Tilray. Of course, those are all businesses in the cannabis industry. It did make, now if you look at this chart, and of course this is a fairly new ETF, it did make a all-time high back up on February 10th at $28.70. Excuse me, I believe it was certainly a lot of buyers came in very quickly and then sold very quickly. So it did rally up from this 200-day moving average. If you caught any of this trend, and this was back in December 2020, right at the beginning of the year here going into January, the Potx rose up very, very quickly. Then for any of those who decided to get in and hold here, look guys, when you see a stock do this, move up and start to come down, for goodness sakes, put a stop in. I mean, this is a pattern lately with meme stocks, and this of course is an exchange traded fund, doesn't matter, same pattern. Things like this, like price, when price goes straight up, at some point price is going to come straight down. I've been doing this for 25 years and I can promise you it's true. No, you're not going to be able to get out at the exact high probably ever, but you don't need to. When you see a pattern like this and price gaps up one morning and then starts down, please put a stop in or take some profits, please. Okay, so this is a common pattern recently. You guys all know it. Yes, you can profit from it, but you need to be wise and don't be greedy. Okay, so at any rate, that's what the Potx did all the way back in February 2021. Came back down, fell below its 20-day moving average, its 50-day, back to where the 200-day moving average was rumbling along here. It caught it down here at 12.23, down here at $12.33 back in the middle of May. The 200-day moving average acted as support, and from there the Potx, we'll call it, started to just move a little higher. So it also in this past week has moved up. We had very good volume today, so it moved up the last 4 days. And today when I captured this chart, it was sitting above the 50-day moving average at $15.16. I like this little breakout here. It looks like a little volume's coming into it. And if you look at some of the leading stocks in this particular ETF, you will see that they are starting, of course, to move. So price today again at $15.16. If in the coming week the Potx can remain above, and I'm going to put a tight stop on here. I'm going to say if it can remain above the 20-day moving average, which is coming in now at $13.58. Some of you may want to say that's too tight, Toni. That's fine. I'm going to put my stop at $13. If you want to, you can put it lower. Maybe you want to put it around $12.75. I'm sorry, not that. Make it lower. Make it about $12.25 if you want to do that, or $12 below the 200-day moving average, again coming in at $12.50. That's up to you. I've just made gains and I am in no mood to give them back, so I'm keeping a tight stop on this. Again, my stop will be at as long as the Potx can stay above the 20-day moving average at $13.58, as long as it can stay above it, my stop is going in at $13 even. In the coming week, and if the Potx rises above 16, I'm definitely going to add to my position. So in the coming week, you may want to keep an eye on the Potx. It may be something to be interested in. However, please put stops on somewhere. Please remain disciplined, okay? Okay, and now, before we go on to final thoughts, please know that if you'd like to become a more successful trader, this is a great time to check out my trader training programs. You will enjoy my powerful strategies devoted to swing trading, trend trading, bottom fishing, and more. My programs are easy to understand and they can help you increase your gains quickly and easily. To see all of my online training programs, simply go to the link on this screen or click on the orange button. Here's the link, or click on the orange button you see below. That's easy. And now let's look at some final thoughts here. This week's question is, does my trading life look like an uptrend on a chart? If you were to chart your trading experience, not the not the numbers, but if you were to chart your trading experience, would it look like an uptrend on a chart? As you progress in your trading, you should feel as though you're making a series of higher lows and higher highs, just like a price uptrend does on a chart. Now, while your trading account balance may or may not reflect the same pattern, that's not the concept here. That's not what I'm talking about. Today, we're talking about your trading life as your approach, your attitude, and your actions. In other words, we're talking about your trading experience over a period of time. Now, some of you have been trading for a long time. Others of you are perhaps not novices. But it's kind of interesting to look at your personal trading life, and imagine what that would look like on a chart. Question for you, are you learning? If you're learning new things all the time, that's an uptrend. Are you growing? Are you expanding your knowledge and your experience? Are you planning each trade carefully? If you're doing that, you're growing. Are you then following the plan that you created? Are you following your plan? You know the old saying, plan your trades and trade your plan. That's golden. If you are doing that, learning, and if you are planning, and if you are following your plans, then you are moving in an uptrend. Now, at times, we all get a little careless, and when that happens, we can experience a pullback, just like a stock price does. If you ignore your stops, the pullback in your personal trading uptrend may deepen to a correction. What's the action for that? Recognize your behavior without recrimination. Don't yell at yourself. Just say, hey, okay, I messed up there. Got it. And put on the brakes. You might even move some money to the sidelines. Then say, okay, what did I do here that wasn't so cool? Write down the lesson points that you learned. I did this, I did this, I did this. Don't yell at yourself. Just write down the mistakes so you can have them in front of you and you won't do it again. Then look ahead, don't look back, and assume your successful uptrend behavior and actions. So go back to all your positive actions. Are you learning? Are you growing? Learning new things every day, planning your trade, training your plan. It's really not much more than that. No one's trading life or trading experience shoots up in a perfect uptrend, including mine. Everybody experiences ups and downs. After all, we're living our lives, and that affects our trading. However, if you catch your pullback mistakes, and that's in quotes, if you catch those mistakes early, you can avoid deep corrections to your self-esteem as well as to your bottom line. So keep learning, keep growing. Finally, please know that if you'd like to become a consistently winning trader, it's a great time to check out my trader training programs. To see all of my online training programs, simply go to the link on this screen or click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.